Good morning. Let me get this stream window set up for you guys. Let's see if the stream wants to work today. Here we go. Awesome. Let us start on the dollar. So on the dollar, this is the weekly chart. Here's our week. You can see we came real close to this buy side liquidity, but we also came down and went, just a touch past the consequent encroachment of the previous week. So let's see, go to the daily. The daily, we were reacting pretty well on all of our upside PD arrays. You can see we touched this breaker, spent a decent amount of time in this daily for value gap, but once we got above this high, we had some candle bodies come down, but the bodies respected this daily fair value gap, this blue one, kind of came up through the volume balance, down, back up. So now that we came up, down, and up, I like the chances of us taking this. The fact that we got so high and pulled back, might not want to do it this week, seeing as it's Friday. That might be a hard run it takes starting next week. I could see that happening. They kind of just like saving this high for next week and then attacking it early next week. Yeah, so that's kind of where we're at with the dollar. I'll go one time frame lower just to see. Yeah, so we broke above this high, kind of respecting this volume imbalance, and we'll see. It's good to just watch the dollar for context. So when you're watching it, even in a small window where I keep below and it's going higher, I know that this buy side liquidity is higher, or if it's going lower, I know that it's breaking a low, like how significant this low is. Go over to ES. ES will also go to the weekly chart. Okay, so today on ES, my focus is going to be on the thank God it's Friday principle. It's ICT principle where, when we have a long run on the weekly, a big candle on the weekly chart, and we also reach a weekly objective, it's likely, not always certain, but it's likely that the candle body will retrace on Friday to 20 to 30% off the low / high of that candle. So here's a fib right here, and you can see I've marked out the 20 and the 30% off of this low. So we'll be looking for this body, and that'll be like context. So we have news at 9:45. It's the manufacturing PMI, so I probably won't trade before 9:45, but I will like to see if after 9:45 it gives us any direction, possibly to the upside, where we can catch a silver bullet into this range. So this is a great range to target. We're below it right now, but it could very well likely get into that range before 10 o'clock. But if we are below it before 10 o'clock, then it's good. It's good to have because it's a narrative. So if we're below it before 10 and you see some structure that makes you think, I think it's going higher, then it's you have this context on top of it. We came down inside of this weekly fair value gap, as you can see. It seems like the body wants to respect it, so The wick on this weekly candle came down. Looks like it came down right a touch above the consequent encroachment of this wick. So consequent encroachment of this wick, body's respecting this weekly fair value gap. We'll see. The body might want to just close inside of this weekly fair value gap. I think it depends on how how bearish and like heavy the market is about to get. I think if this might be an indication of how next week looks, seeing as we did break this significant low. So I think whether we close in this weekly fair value gap or close within the thank God it's Friday 20-30%, that might indicate how heavy next week would be. Going down to the daily chart. Okay, so coming into the daily chart, we had 2 pretty down closed days. Yesterday was FOMC. So we'll just see if there wants to be a retracement. We have this daily fair value gap that was created a while. I'm keeping it on the chart because we respected it twice and then blew through it. I'm keeping it there just in case the market like retraces higher than 30%. That level is there for some context for us. I'm not thinking we will get into this daily fair value gap today. We could. Something I am watching is this order block on the 4-hour. You can see come down, changing the state of delivery, come down again. But I like the way it looks even better on the hourly chart. So I have that highlighted by this purple box, is this hourly order block. We'll see once we get up to it. I know the chart's getting kind of messy now, but just remember these 2 thin red lines are our 20-30% target. I'll probably take this liquidity off. That was just the sell side that we took from previous days. Yeah, so we'll see what the opening range brings us. Since it's the end of the week, coming off high impact news driver, probably we're not looking for like a really large range day. I'm probably gonna kind of target some internal day liquidity. Just as you can see, like yesterday was the day that took some daily liquidity and then came down. So there's no real daily liquidity we can target right now. There is yesterday, but as you can see, we kind of came down below yesterday's session already. So going back to the hourly. Yeah, so what we'll be doing is we'll be looking for some kind of setup come 10 o'clock to probably go long if we're below these red lines to get into that 20-30% range. Going down to the 15-minute. This right here is just the opening range from yesterday's price action. So that's the high and low between 9 and 9:30. I've been putting this on my chart lately just because I thought it's something I've been wanting to study in my journal. So I might do that today. It was interesting to see how price kind of bounced off these levels. ICT's talked about the opening range gap a lot, which I will have on my charts today. Via this yellow box. This was the opening range gap, but this box denoted the opening range, and it was interesting how between market open and 11 yesterday, we just kind of bounced inside of it, and we treated that level pretty nicely. So I'll probably do the same thing today. This is that order block on the 5-minute. You can see the up close candles. just highlighting our trading windows. Okay, let's go to NASDAQ. NASDAQ is a very similar business. We have, here's the weekly candle. We're right now a little bit below the 20 to 30%, 20%. So I'm hoping we kind of hold off before going in there. Might not happen. Here's that low in case we do want to get pretty heavy today. We have this volume imbalance, this weekly fair value gap to the downside. Going to the daily. It's looking similar to ES. Have this daily fair value gap highlighted. And this right here is consequent encroachment of this daily wick. We closed a little bit below it, but price is still behaving, still respecting it. Going down to the 4 hour, we have this similar order block as ES. And then on the 1 hour, which is where I highlighted it, if you notice, so the order block is this purple box. We also came right up to mean threshold, so 50% of the order block. We came right up to it perfectly to the tick right here. I like that. I have this hourly fair value gap highlighted just for context if we start to go up. Since we have this order, like it's a bearish order block, but we're also expecting price to land somewhere between these two red lines, the 20 to 30% mark. So that gives us a pretty small range that we're trying to land price in today, context wise. So we're thinking, okay, it's probably going to pull back somewhere to 20 to 30%. We have this bearish order block that is to the lower portion of that. So it's like, and price is already kind of hugging the bottom of it. So it's not like our target is super far away, but having more levels on the chart kind of gives more context intraday when we're bopping around. So I'll be looking at all these levels and seeing which ones we respect and which ones we don't intraday. Going out to the 15-minute, you can see again, respecting the mean threshold really nicely. Structure does look like we want to go higher, so we had this kind of chop and run up in the London session. Coming in at 8, we get some direction, might pull back into the open to come back into that on the 5-minute. So I am keeping the previous day's opening range on the chart. I know it's getting a little sloppy in here. You have these 3 colored boxes overlaying. But I do want to keep this opening range gap from yesterday here because it's so large, because it's so close. And especially since we'll be watching really closely how price behaves between these 2 red lines, any kind of fluctuation and stop, it's nice to know why it's happening. So for example, if you didn't have mean threshold on your chart, the fact that price came up right here and stopped right here might look random to you. So the more levels that you have on your chart, sometimes it's a balancing act. You know, the more you have, you can get kind of analysis paralysis, but the less you have, you might be lacking context. So there's a lot of stuff going on right here, but it's for one day, last day of the week. I'll definitely take this off going into next week. But yeah, so again, so even if we saw price come up past mean threshold and say we saw it stop like right here randomly, if we didn't have the opening range gap, we'd be like, okay, what's happening? So it's nice to have more context. I also will have that on ES. I'm waiting for, I wanted to get closer to the open before deciding whether we wanted to trade ES or NQ. And again, I will be waiting until after 10 o'clock to trade because of the 9:45 high impact news. I feel like the flash manufacturing lately hasn't been like, it doesn't make price go too crazy as of late, but I'm just going to wait. So this is our trading windows. Going to go over to the 3-window chart to figure out what market looks a little more conducive. So I do like how NASDAQ came up in respect to that mean threshold. Usually, and this has been leading me to trade NASDAQ a little more lately, usually if I start to see like NASDAQ going to certain PD arrays before the session opens, I'll kind of lean towards trading that over ES. Again, so we do have that order block on ES. This is it. We haven't got there yet. So it seems like we're respecting the mean threshold of this daily. Remember, this orange box, oh, that's the weekly. Orange box is the weekly fair value gap right here. So if we did want to land between 20 and 30%, we would have to be going up above that weekly. Have a low, high, lower low. Coinciding with this fair value gap. Again, I feel like I've been saying this a lot with ES. It's been making me uncomfortable, like the disconnect and where the body's been opening. It is pre-market, but if you can see, like the body closes and body opens, there's just a lot of gaps. I don't know why it's been like that. We are on the December contract. So for breakers, if we have a bullish breaker and it's a low, high, a lower low structure, ICT has said that you take the last up closed candle, and it kind of bothers me that the last up closed candle isn't also the high. So like this is a down closed candle. You could probably consider that an order block more than a breaker, but if you were to take the breaker, you'd be looking at this one. But I don't know, I would feel a lot more comfortable highlighting this breaker if it was this candle was the up close candle. But what I'm going to do is I'm just going to leave this fair value gap on here and know that we have this low, high, lower, low structure, which also kind of looks like a change in the state of delivery in these 3 down close candles. So we'll know, we'll just, when we're looking at this, to pay attention to this high. Again, I'm waiting for 10 o'clock after the 9:45 news driver. It'd be nice if price came down and just kind of spent some time up and down around through this order block and then sent it higher. back and look at NQ. Yeah, still hanging right below this 20% line. We have that similar 5-minute order block. Okay, now what I'm going to do is I'm going to look at the highs and lows of ES and NQ on the 5-minute. I know it gets a little cramped right in this window, but we're really just looking for highs and lows. So kind of just looking at like this high, that high. So we're looking pretty symmetrical today. I like that. I say that because we have a high, low, higher / equal high, lower low. We have the same thing here. High, low, higher high, lower low. Come up. This is still keeping that low, and then it sets a new high on both markets. So we're looking symmetrical today, as yesterday we did not look that symmetrical, and I ended up not trading. There was some like decent silver bullet and PD arrays yesterday. I ended up going back and looking at price. But it was also very, very tight range. So you'd have to be really, really nimble. The dollar. Also making higher highs while we're making lows. That's good. Still a little unsure which one would be preferable today. I'm going to do ES just because I've spent more time on ES. I think since I've started this YouTube channel, I've done more of NASDAQ, but prior to this YouTube channel, I was doing mostly ES. We'll see. We'll flip back and forth between the two. Sometimes what I'll do is like say we between 9 and or 9:30 and 10, and we're watching this fair value gap on the 5-minute, and I like the way NASDAQ is treating it better than the way ES is treating it, then I'll stick to NASDAQ, just because you want to watch whatever is your narrative and your, the PD arrays that you highlight out are supporting. It's just going to lend into a clearer picture in your head. When we do open too, I will be toggling to the regular trading hours in the 5-minute just to see if there's an opening range for today's session. We have interest in have these pretty equal lows here. So if we do start breaking below these London lows, that will be our target. But for right now, we're gonna look for some context that makes us think we want to land between this 20 to 30%. Thank God it's Friday. Coming down into that 5-minute PD array. So we don't have to land between this 20 and 30% mark. We're just seeing if we want to. I'm watching this PD array to see where price wants to go. It's also a 15-minute fair value gap as well. So I'll be watching how we respect on the 15-minute, because especially on the 15-minute, if we close below this 15-minute fair value gap and start to target these lows, I'll be a little more hesitant to think of longs. Okay, so market opened. I'm going to go look at the regular trading. So we have this, nice. We have an opening range gap, which is the close to the open. So we're going to have a lot on our charts today. So I will be paying attention closely to the levels, this opening range gap as well. Break it into quarters. It's another reason why I believe it's pretty good to have more on your chart, because if we are looking for higher prices and we see like a turnaround right at the 50% of this opening range, that's good context. See right here, came down, bodies respected 25%. I'm going to go over and look at NASDAQ. I'm going to map out the opening range on NASDAQ as well. Okay, so I like what ES is doing. Came down to the opening range, turned around right at 25%. We'll see if it wants to come up and then reclaim this fair value gap in blue. I want to see how it treats that. We came right down right through it, but doesn't want to come back up and close above it. As you can see on the 15-minute, kind of looks like we took a little bit of liquidity. We took this low. Also took the low right there. Gonna put that on there for context. Came one tick below. Took out a low on the 5-minute and the 15-minute. Yeah, so we'll wait and see if by 10 o'clock comes and we are making some higher highs. I would say we're definitely going to this 20 to 30% range. But let's wait and get a little more information first. This candle, this down close candle was interesting, just because that was 9:34, so that was the last candle for this 5-minute candle, which was pretty heavy. I would have, when you're like framing liquidity, and we frame this as sell side liquidity, if we want to take it, so we're taking their stops to go higher, I like it when we create when the body bounces more off of it. I feel like that's a stronger indication. It doesn't have to. Just because we didn't bounce that hard off of it doesn't mean it's not doing that, but I feel like it's a stronger indication when it does. So I got price just kind of toying around this 25% mark. Again, this is 25% of this opening range gap. And if by the end of 9:30 to 10, going into 10, and especially after 9:45 where that news comes out, if we are spending more time around the lower part of this opening range, I might look for reasons to take out these equal lows. But right now, I'm not too sold on that. How we treat this opening range gap level will probably be a big indicator. Have the dollar plotted here as a line for the 1 minute. we're probably just going to chop wood until 9:45 and that news comes out. I'm paying attention to how the candle bodies respect this fair value gap. Because if we start working our way lower into this opening range, and then we're also respecting bearish PD arrays on the way down, then I'd be more inclined to say that we'd be taking these equal lows down here, the bottom left. Especially if we're doing that, we're respecting bearish PD arrays and the dollar starts getting animated to the upside. Okay, so it came down to 50%, which is still fine. But the 15-minute does look like it could be like a decent retracement to go lower. So this was Thursday low, opened Friday, retraced back up, just descended a little lower. Could be a possibility. See how the 15-minute came right up and just filled in all these inefficiencies all the way up until this last candle, this last inefficiency. The bodies respected that fair value gap. Taking London liquidity, buy side to go lower, could be a possibility. It seems like we're making a swing low right around that, right off that 50% mark. So what I'll be looking for between like 9:45, if it gets animated off the news, or like into 10, is do we want to aggressively retrace up? So if you do have a narrative that we're coming lower to get discount to sell higher at a premium, then this kind of like back and forth to the downside is just to get people thinking that we're going down to then rip it above higher. So how price delivers is big in, you know, deciding like where are we going, because if we kind of melt our way down but then get animated to the upside, then it becomes even more clear that we were coming down here just to take sell side, just to get a discount to go higher. But if we don't see that animation to the upside, we could expect like a rollover into the downside. Okay, we got a minute until the 9:45 news. A little bit of animation. I'm liking how this dollar is actually getting a little more animated to the downside, so that's also something I'm watching. Dollar's getting animated to the downside. Again, I want to see animation that takes out swing highs. So while that was a pretty bullish up close candle, I don't care too much if we don't see swing highs taken out. Going to take a quick look at NASDAQ. So NASDAQ, similar scenario. We bounced off that 50% of the opening range. Looks like we're taking, took that swing high. So I like looking at NASDAQ just to see, is it telling the same story as ES? I like the 15-minute look of NASDAQ better, just because we had it. It looks like it looks a little more bullish. But we're gonna go back to ES. Still watching. Still haven't taken this swing high. Okay, so let's see how we treat this fair value gap right here, because we took sell side liquidity. We bounced off 50% of the opening range gap. That could constitute a 2022 entry model. Took the 15%. We took liquidity on the 15-minute and the 5-minute, but we haven't taken that high yet. I wouldn't want to enter there just because we haven't had that good shift in market structure. Okay, there it is. That's all you need. You just need the candle to go above that, because once it prints that wick, once you get a wick above the swing high, that's enough to constitute the shift. If we were to come back down into this, I'd be a buyer. So I'd be a buyer here because the dollar is getting so heavy. I'd put my stop, I put it right at this low, just because if we come down and take that low too, we're definitely probably going to go a little lower. watching on the 5-minute. So a more confident, or not, a more how should I say, defensive entry would be waiting until we get above this 5-minute fair value gap, just because you saw us respect it bearishly right here. We came up, came down, then we just came up and tapped it. And now we're going down a little. That's why I entered in with just one. So if we come down and take this stop, then it's like, okay, I'll look for some shorts actually. So we're watching to see how the candle body respects this fair value gap, under the impression that we have a 2022 model happening right here. So we took liquidity on the 5 and on the 15. We had the shift in market structure right here. We bounced off 50% of the opening range gap. Watching the dollar. Watching to see how the candle bodies respect this. Okay, dollar seems to be bouncing. Didn't want to take that low. This little entry is getting in the way. Okay, so this candle body came down and closed right at the bottom of this fair value gap. And then we had this one open below it. That's not ideal. I have seen it do that and then come back up. But if it doesn't come up very quickly to come right up and close on the higher end of this fair value gap, then that is pretty bearish. Again, watching the dollar, this line, watching how this candle prints. We have a 16 tick stop. That's not huge, but it's coming down. Okay, so it took that. That's fine. Little warm-up trade. We still have our 10 o'clock time. So especially if we start to take this low, I will look for a short for the silver bullet, off the context that we're digging deeper into this opening range gap. So we want to see the downside of it. It wants to see the other end of it. And we came up and treated this 5-minute fair value gap bearishly twice. As you can see, it also started respecting the bearish 1-minute PD arrays. Watching how the 5-minute bodies, this candle, this 5-minute candle, just closed, still closed on the 50% of our opening range gap. This next 5-minute could be the one that sends us lower, but we'll be watching. I'm watching how the dollar is still dropping. Okay, so we came up, treated this as an inversion off that tap. The dollar, you can see on the 5-minute, came down equal to this low. And I want to see, does it want to go through this low or turn around? Tapping it again. Gonna extend this into our 10 a.m. range. Okay, it looks like the dollar wants to go lower. Coming up through this fair value gap, not respecting it to the downside. Can extend this one out. If we came up and closed above this fair value gap, I would like longs. It's the same context that we tried to enter in off this. Seems like I just wanted to take it deeper one more time to get stops. Our stops got. But if you can also see here, we had a similar 3 drives pattern. We had the 1, 2, 3. And when I see things like this, where we start to break our shift in structure after 3 lower, like a 1 low, a lower low, and then a lower low. I don't count this because it didn't go lower. It didn't take stops. And then we see a turnaround going into the 10 o'clock hour, respecting 50% of the opening range on the 5-minute. Let's see. Okay, it is 10. What do we want to do? I want to watch how this candle prints. because the dollar is dropping still. So dropping dollar, if everything's working as it should lead to higher indices. But we are respecting this bearish fair value gap. Did it 3 times. Came down. Came down. The body closed above this one. Just gonna try and be patient here. See this past 5 minutes have just been pretty sideways. So don't want to get caught in any lack of direction. But we do have this dropping dollar, still dropping. I like how we're between these two fair value gaps, because then what I'll do is I'll wait and I'll see which one do we decide to obey and which one do we decide to disrespect, to not listen to. If we get above this one, since we already came into it twice and then took stops, I would like to use it as an inversion. But I'm going to wait. I'm going to wait for that. Looking at NQ on the 1 minute. So you can see it didn't make that lower low right here. This was the low that took our stops, RIP to us. But on NASDAQ, it didn't take that lower low. See? Maybe I should have stuck with NASDAQ. Yeah, this fair value gap. This is the fair value gap on the ES that we entered in on, and it never came down below our low. Let's take a look at NASDAQ, because if we were in NASDAQ, we'd still be in that trade. I think that's also low-key why ICT has been trading NASDAQ way more, because he started off this year saying he was going to trade ES. And he's been like strictly doing NASDAQ, and I think it's because things like this, like NASDAQ, just respects the principles a little more. We've been staring at ES so much. I do want to see if we close above this and come down. I would enter on the come down. I did want to kind of try and shift to NASDAQ, but we've been staring at ES all morning that I'm just a little more comfortable with watching ES. I mean, if they are, let's see. I like how big this wick is on the 5 minute. Okay, we just got ticked in for 2. I'll set the stop right here. So in between our stop, we have what looks like this order block just below consequent encroachment 50%. It's also right at 50% of that other fair value gap. That's really annoying because that first trade we were in on NASDAQ, our stops wouldn't have got hit. It had this SMT. I mean, that just kind of proves like the theory behind a lot of the concepts we're trying to employ here, where they hunt stops. They try and buy those opposing orders. So we entered here. They drove it down one more time to take stops. And that's kind of also why you see those 3 drive patterns. 1 for stops, 2 for stops, 3 for stops. But the whole time on the 5 minute, we never closed below 50% of this opening range gap. And on NASDAQ, it never even made this lower low. So if we were to take that same trade off that same fair value gap printed on the same minute in NASDAQ, and we put our stops below that candle, we would still be in this trade. A little annoying because I spent a lot of my time on ES in the beginning of this year, and going into the second half of the year, like ES has just been doing me a little dirtier than NASDAQ. I think that's also why ICT has been kind of doing a lot more NASDAQ trading. So we're targeting this right here is the 20% off the low of the weekly range, the weekly candle. That's the ICT's Thank God It's Friday concept. Normally I preach that we take the first 10 handles on NQ, but I think I'm going to hold off right now because of a point I want to prove that I will make a video about later. Okay, so this is cool. We're getting some direction coming out of this chop. We did get caught in some sell stop raids. On ES, it's 5 handles, so getting my NASDAQ and ES confused. On ES, normally my rule is we take the first 5 handles. I'm going to wait until this buy side liquidity just because I want to, which is a little more than 5, but I want to prove a point. And I will make a video about it later today. I've been noticing ever since I've started this YouTube channel and I start like speaking my trades out loud and narrating them that I do have a little bit of trouble. I think a weakness of mine is when I'm in a winning trade, getting the most out of that winning trade, which is something I want to speak on in that YouTube video that I was just talking about, like the point I'm trying to prove. We have this dropping dollar. That's awesome. We did take out some equal highs there, so I'm going to move my stop just to shy above break even. Yeah, I've been having trouble kind of like getting the most out of my winning trades. So normally what my rule is you take the first 5 handles every time on ES. So we would have taken profit right there, but I'm going to hold off for this buy side liquidity. So you could argue that that was our silver bullet, or it was. You got 5 handles off the entry using this inversion. But I'm gonna watch that. So later on in the YouTube channel, once we start to grow this account a little more, and if I was to trade a little more aggressively, we could use that as a re-entry to go long. I do want to grow the equity on this account a little more before doing that, but it's something to pay attention to. We still have our dollar dropping. We took this buy side right here, and that could constitute enough depending on how the market wanted to react today. If we wanted to have like just a really small daily candle, then it took stops there, and that just might be enough to come back down inside of this range. But I'm going to hold off for this buy side liquidity. I like how we have 2 candle bodies. The candle bodies seem to be respecting this, with the dollar coming down lower. Let's see if we get a close below this. I'm going to adjust this right to the bottom of that candle because that's the bottom of this fair value gap candle. Okay, I really want to see it start to get above that. I don't want to see that. Let's watch and see. Okay, I'm feeling like if we did want to go higher and take this buy side, we would have respected this fair value gap a lot more. We wouldn't have had that close outside of it if we wanted to actually take that buy side right now. As you can see, the dollar on this line, I would have liked to see it continue going lower, but now that it seems like it kind of wants to bounce, we could see the stop could be taken right now. You know, we're going to move the stop a little. We're going to move it and just allow it to enter in on our silver bullet. See how it wants to behave. That is a dangerous thing because we did technically take liquidity. We could have taken buy stops right here. But it also, if you notice, the consequent encroachment of this silver bullet coincides with the top of that opening range gap. So we're going to have it just a little bit below consequent encroachment of the silver bullet. It's like right at mean threshold of this order block. So it's kind of like where we had our original stop. But I do not like how we didn't respect this to the upside, because if we were in a really good buy program, we would have respected that to the upside a lot more. This silver bullet, the top of it, looks like it is a 5-minute fair value gap. So if we start to see some, like we came back down and we get animated off of it, that'll be a really good sign, as we just came down to address this 5-minute fair value gap. But the 15-minute, that wick is looking kind of dangerous. I'm going to measure out this mean threshold more exactly. Okay. Again, so keep that below mean threshold of this order block. And that was our original stop location before we moved it up to break even. But the dollar is rising right here. So if we don't see these highs returned to, and again, it could go up here and it's just setting these up for another macro. So maybe it's just equaling out these highs to be taken between like 1050 to 1120 or the like 1150 macro. But if we do come down and hit our original stop location, I will definitely. So that's why my rule is you always take 5 handles at least. Yeah, so got our stop hit there. Getting pretty animated to the downside. This still was our silver bullet. It was 5 handles off an inversion fair value gap. We got it. So I'm going to leave that like that. I'll take this off because it did not respect it. And I'll take that off. Okay, just waiting to see now. if we get through this fair value gap, definitely target that low. I want to see what NASDAQ's doing. What's NASDAQ doing? It's dirty. Okay, so NASDAQ's still yet to get below that fair value gap that we talked about. But if you notice on our yellow line dollar, the dollar is rising. It's bouncing pretty hard. So we close below this, the rising dollar. This candle came right up to about, looks like mean threshold of this up close candle. I can see these lows being taken. I'm not going to enter on another trade just because that's 2 in this morning session. 2 losses we took in the morning session, so I don't want to get too emotional trying to just like scalp this range. Probably come back in the PM session. Yeah, NASDAQ still a respected consequent encroachment of that fair value gap. After today, I'm probably going to start sticking to NASDAQ a little more, especially if NASDAQ, I'm going to go to NASDAQ right now. If NASDAQ actually bounces off of this fair value gap and goes higher, it will just show that it's respecting all the PD arrays way more than ES. So that original trade we tried to take would have been the 2022 entry model. So we came down on the 5-minute, took stops, and we took them on the 15-minute. Took them on the 15-minute as well. You came, had the shift in market structure right here, came down, entered. That's where we entered on ES, was this 945 candle. And then I guess it's a little bit of my fault for not taking. You could have got 43 handles or ticks on, no, handles on NASDAQ. It still didn't take that high, similar to ES, but from that original entry, our stops would have been at the bottom of this fair value gap. And if NASDAQ bounces off this and takes that high, I'll be pretty upset at ES just for delivering such sloppy price. That's the Dow. Yeah, so here's that 945 candle on ES. For anyone who's joining in late, here's the executions. We tried to trade this on ES. We entered right at the top, and then we got our stops ran. Then when we got the stops ran, I was thinking, okay, we have 1, 2, 3 stop runs. I wanted to see it get above this fair value gap, used as an inversion for a silver bullet. That was the silver bullet because you got 5 handles off the top of this. And I decided to be greedy, didn't take profit at 5 handles, wanted to wait for that buy side. But we came down. Now we're going a little higher. Just some like real sloppy delivery on ES. Like it came down and just completely drew out of the lines of this fair value gap. But on NASDAQ, we came down to consequent encroachment. Like that's pretty beautiful. So a little frustrating. trying to wonder if I had entered here on NASDAQ, I don't know if I would have found a silver bullet. I probably would have like entered again here, trying to catch a silver bullet off of it. And then it would have came down all the way to here, which I probably would have had my stop trailed a little higher at that point. So took 2 losses in the morning. I'm going to hold off on trading for the rest of the morning just because I could easily fall into like a little revenge trading cycle. So I'm going to hold off till the PM session. The PM session, I'll get on. I think I'll probably, since we took 2 losses, I think I'll only try and trade it if there's some really clear and good setup. Traded 2 times this week, took 2 losses. One of them was pretty large. Monday's loss was pretty large, which I'll show you in a moment. But another thing too is you're gonna have losing weeks, so something that like mentally that's good to like look on is, you know, when you are a profitable trader and you zoom, you're gonna have winning days, and then it's silly to think you're not gonna have losing days. But then if you're a profitable trader over, you know, a long period of time, it's the same mindset of you're also gonna have winning weeks and you're gonna have losing weeks. And the losing weeks will definitely be in less frequency than the winning weeks, assuming you're profitable. But when they do happen, you just kind of like ICT says, you can't let them define who you are as a trader. So I'll show the account. So this was our big losing day on Monday. And then I decided to wait until after FOMC. Yesterday came. Yesterday I woke up with a splitting headache. So I ended up not trading in the morning because I had a pretty bad migraine. So I just took that day. And then today we have this decent sized day. So kind of one of the rules that I always preach is always take 5 handles on ES. If we had taken that 5 handles, we would have been up. This probably would have been a 250 plus, but you can't get too caught up on like, oh, if I would have done this, then it would have been like this. Like if I had just taking both of those, I was in 2 contracts. If I took 2 contracts off at 5 handles, we would be up $500 on the day. You know, there's a lot of what ifs. It's easier to get into like what ifs. So like this is something that like you can journal about, you know, because those 2 what ifs are ways you handle your executions. But you also can't get too caught up in like, oh, if it would have, like, definitely don't say to yourself if it would have taken these highs, because that's just gambling. Like how you execute a trade is in your control. So if I took 2 handles off, 2 contracts off at 5 handles each, our day would be a $500 morning versus this $500 loss. I wanted to hold off for this buy side, which looks like it might run. Like there's a possibility that it could run it. But we're not going to get too caught up on what the market might do. We're only going to get caught up on our execution. But I did like that trade. I liked where the stop was. I did move it at that one point, but I didn't move it to a random place. And I did like how the market was delivering to take this high. Like if you saw this, so this is, we did the execution on ES, but this is NASDAQ. You know, when NASDAQ coming off of these, the structure looks like this is the draw on liquidity. It still looks like that's the draw on liquidity too. And it like came up here, kind of took out this liquidity, and then like came back down to take up some sell stops. Honestly, you might want to call this like a seek and destroy condition. The fact that we like took buy stops here, came back down, took some stops below this low, came back up. I mean, this is kind of range bound. If you look at the 5 minute, look at the 15 minute, there's not really direction on it. If there was direction in this market, like it wasn't, it seems like it's kind of high resistance today. So if it wasn't high resistant, we would have taken this buy side liquidity immediately, but we didn't. But that was my mindset around not taking profit at the first 5 handles on ES. So this is the P&L. As you can see, it hasn't changed much. The account balance, we started off strong, came back down a little bit. Again, I'm not too worried about this. I spoke about it in a video on the channel, and like kind of psychology and FOMO video on the channel, just talking about how like you're like trading will have ebbs and flows, and your winning days, you know, just make sure your winning days outpace your losing days. And not a whole lot. The rules we're respecting for this account are the prop firm rules. So I believe so I will this weekend pick a prop firm that we will model our rules after, but I know like most of them for the like an account this size are, I think, like 3K for max drawdown. So I'll look at the rules and I'll make sure that we don't break any rules to the downside. But I'm excited for next week because, you know, this week we had the FOMC, and that always makes things a little sketchy and price action a little irregular. Looks like we're about to go up and take that high. Yeah. And the thing about this too is, you know, it's like, oh, we're definitely going to take that high now. And like you could enter in, I could enter in on a trade right now and it could go and take that, and I could like, you know, scalp back some more money. But that would kind of feel like a dirty trade because, so my rules are, you know, 2 losses and like you're done for that session. So we're done for the AM session. So it might take that, and what you'll do is I'll just journal. I'll like watch price and then I'll journal like, oh, it did. So my draw on liquidity was correct. Maybe the entry wasn't correct. And if the entry wasn't correct, and you kind of talk about, you know, what were the conditions. So this kind of looks like some high resistance. I think if it wasn't a high resistant, we would have taken it on after breaking these highs. Looks like we're going to want to take it right now, but we had the draw correct. And even let's go look at what ES is doing. That's the Dow. So ES is going for it. So this buy side that I was trying to hold out for, it seems like it wants to take it now. So that's something that like you'll journal about. You'll say, okay, you know, I had the draw on liquidity correctly. Where did I go wrong? So it wasn't the draw, like the direction we got wrong. It was the fact that we kind of got caught up in some chop. Like I said, we got our stops taken on ES here, so which didn't happen on NASDAQ. But then I didn't take my 5 handles here. So I should have, according to my rules, taken the first 5 handles. But then it came back down in this really, really deep retracement. And if we were in better, like a low resistance liquidity conditions, I highlighted this fair value gap. I would have like to see us bounce off of that and then go. But we had such a deep retracement, and now we're coming up for it. Yeah, so this is one of those things where it's like, when you have a losing day, to not beat yourself up over it, you gotta really focus on what you did right. So we had the draw on liquidity correctly. Like, I spent however long this live stream is, I spent the whole morning outlining how we were going to come down to this opening range gap. I was looking for a bullish narrative. I wanted to see us come up, take this buy side, and then come up to this red line, which is a 20% retracement on the weekly candle. So our narrative was correct. What happened was we got caught up in some ugly price action, which is another reason, we'll just talk about, like, journal it out. We came to the tick right there. Dollar, aggressive drop. Yeah, so I'm probably going to start sticking to NASDAQ. NASDAQ took the high. But NASDAQ also had it respected these PD arrays. This one specifically respected that a lot better. So on NASDAQ, you could argue that was the NASDAQ silver bullet. Go back to ES though. Yeah, so ES taking that buy side that I stubbornly tried to hold out for. And then, it should retrace to this 20% off the weekly low. You can see it right here. It's the weekly candle. This is ICT's thank God it's Friday concept, where the weekly candle retraces into 20 to 30% of the weekly range. Yep. This is the daily. And like we took the liquidity on the daily on the daily chart, that is. So you can see this candle came down below that low. Even though that technically happened like in that Thursday trading session. But our narrative was right today. Yeah. This is why journaling is important. Because, so going back, just reiterating what today could have looked like. So we technically broke our rules today. My rule is you always take the first 5 handles and then move stops to break even. If we would have done that, we would be up 250 and then we would have got stopped out for break even. So it would have been 0. So instead of a $500 loss, we would have had a 250 profit. And then we could have probably went into the afternoon session with spirits a little higher. So that's why you journal. It's to kind of, you don't journal about like, oh, like the market could have done this. You journal about like how you handled yourself. I'm just going to watch for until 11. I want to watch and see how if we do get a run for this red line. You can see us, so came right up. This purple box is an hourly order block on ES. So it came up, touched it on the 1 minute, rejected it. But I do want to see it kind of work its way into it, because this 20 to 30% is this order block lies within that. So I'm going to take this weekly fair value gap off the chart. Just kind of clean it up a little more. It was the target for earlier this week, so it served its purpose earlier. Dollar's still dropping, as you can see on this yellow line. So when I go and journal, I'll probably say something along the lines of, I was really proud that I had the draw on liquidity correctly. I knew it was going to come down into this opening range gap, and I knew it was going to use that as support to then go higher. I'll say I could have done better. So kind of where we made our errors is, I will say I could have done better with my entries, and I'll probably, just talk about how NASDAQ delivered, and if we had our same entries on NASDAQ, price delivered better on NASDAQ. I'll talk about the entry. I'll say we entered, on a 945 fair value gap with the idea of a 2022 model playing out. And what I always do is I always do like a screenshot of the chart. Like I'll just screenshot this whole thing right now, and then I'll talk about it in the journal. So like we took the sell side liquidity on the 5 minute and on the 15 minute. And when we saw the shift in market structure, we entered on the fair value gap at 445. It played out in NASDAQ. It did not play out in ES. And then I'll kind of talk about what I should have done better was, taken the first 5 handles on ES. We re-entered on a silver bullet. We used an inversion fair value gap that coincided with the opening range gap. Once price closed above the silver bullet, we entered when it came down and touched the top of the silver bullet, inversion fair value gap, and it ran for, so that's what we'll say. We'll say it ran for 6.25 handles. We did not take profit at 5, tried to hold out for higher buy side liquidity, and then it came down. And then we'll say, later, I'll say at, 10:30, it went and ran for buy side. The draw on liquidity was correct, and it was just some high resistance market conditions that knocked us out of our trades. Again, all positive, kind of like pep talking, wanted to sound really hopeful. Interesting. And then another thing too is kind of watching. So you do get a lot of value out of continue to watch the rest of the session. So because that's when you see, oh, okay, so we took that buy side, how does price handle after we take the buy side? Comes back down. I could see us coming down to the top of this candle. If you want to treat that kind of like an order block that coincides with this fair value gap. And then on the 5 minute, that would be the top of this candle, and it would act like a rebalancing. But we also, took liquidity on the higher time frame as well. Hit that order block, higher time frame order block. So maybe it will retrace and just chop wood. Another thing too is this SMT divergence right here that we got stopped out on, and it was an SMT from NASDAQ. So like that's an example of like that crack in correlation. Like for one moment, it was just this one. Like the markets into the open and in the opening range were pretty decent in correlation. So when you have that like small crack in correlation, that is just an SMT divergence that lends to this upside narrative. So that SMT made me more confident to enter on once we closed above this inversion fair value gap silver bullet, when we came down, just to enter on it like that. Whereas somebody might say, so this candle was a fair value gap, and you might say, I'm going to wait for us to come back down into that fair value gap. You can do that. You would have missed out on these 5 handles, but I entered on the touch that back because we had that SMT divergence. Also, if we do get into this 20 to 30% range going into the afternoon session, that would make me a little more hesitant to trade the afternoon, just because in the morning this was our target, so we had a target. Whereas if this was our target for the morning and our target really for the end of the week, if we enter it, what's our target next? Like we could scalp just highs and lows, but that's usually not how I like to trade. So if we did spend the rest of the day in this, because we're under the assumption that the day and the week is going to close within this 20 to 30%. So if we get there when the afternoon PM session starts, it's like we're already at our daily or weekly objective. So it would kind of be a force to try and go in. I mean, you could if your trading style is, you know, I'm gonna scalp highs and lows. You could do that. It's not my cup of tea. Dollar seems to be rising a little. Maybe it does want to leave that for the afternoon. Look at NASDAQ. So NASDAQ actually is in that 20 to 30% pullback right now. Interesting. See, NASDAQ respected its PDRAs a lot better. Came down to consequent encroachment. Came up. Closed above this 5-minute fair value gap. On the 1 minute, came down. Came up again. And then when it retraced, the bodies respected this fair value gap right there before taking off. Respected it on ES. Appreciate you sticking with me for this long. If I'll kind of explain what my thought process was for sticking out for this buy side liquidity. So I made a video kind of talking about trading psychology and like how to handle losses and like what good trading actually looks like, because we had this big loss day that came out to almost $1,000, and then I didn't. This was on a Monday, and then I didn't trade Tuesday, day before FOMC. Didn't trade Wednesday, and then I was actually really excited Wednesday night to trade Thursday, and then I woke up with a splitting headache. I think it was because I went to the gym the night before and just didn't drink any water for like the whole afternoon going into sleep. So I think I woke up just extremely dehydrated. So I didn't trade yesterday because I had a splitting headache. And then you came on today and then took another loss. So we traded twice this week and lost twice. And my goal with holding out for this buy side liquidity was because in that video where I made after this loss. I was talking about how what you're really trying to do is just make sure you don't kill yourself or kill your account, because losses will come and winners will come. And when your winners do come, and every now and then you'll let those winners run. If you want, you can go watch that video on the Psychology FOMO playlist. But I was saying how the winners will run, and those winners are what's going to really take your equity account equity curve like to highs. So even though we took these losses, we still haven't got down below 49,000. We started the account at 150. We had a strong start to the account, so we kind of built that cushion. But that cushion we built doing just kind of base hits, small profits. That cushion we built is what allowed us to have days like this. So again, kind of talking more about the long-term plan for the account. Once we get the account equity a little higher and we start playing a little more aggressively, what'll happen is you'll have more runners. So we'll be taking more contracts. We'll have more, those runners will then be heavily weighted more. So what we're doing right now is we're just focusing on base hits to get that equity cushion, which is what we did, and that's what allowed us to have a losing week. And then what we're going to do is we're just going to get base hits to get back to this. But I wanted to wait for this buy side liquidity, because what I was going to do is I thought when we entered right here, we were going to, and we came above and got out of this slop, I thought we were going to take that buy side. So I was like, I'm going to hold off on the first partial until that. And then I thought what was going to happen was when we take that buy side, I would take the next partial up here. But price didn't want to do that. It wanted to stop right after taking these highs, and it wanted to turn around. I didn't take the partial, and we got stopped out. But the plan was, and I'm hoping going into next week too, again, so the whole point is not blowing yourself up and just kind of not getting too bent out of shape on the losses. So my mindset is going into next week, I'm going to try and do the same thing. Basically, I'm going to try and get a nice runner that will give our account equity a nice boost that will lift us out of these losses. And just to show, and this is all under the assumption, if you're at that, your win percentage is above 50%. So I try not to get too caught up on like RRs and like win percentages, because like you can be a really successful trader with like a 30% win rate. And that was what I am planning on doing and hoping to showcase is, we'll get a nice trade. I thought today was going to be that. It wasn't. It's okay. We'll get a nice trade, and then we'll let a runner run, and that runner is gonna like in one day probably lift us out of this drawdown. And then we'll go back to just base hits, get the account equity balance up. And then what'll happen is every now and then over those base hits, you'll have another runner that'll just lift your equity account's balance up. So yeah, we had the draw on liquidity correct. It was just a day that didn't want to deliver in that clean a manner. But again, that's why you just kind of like make sure, as long as this wasn't like, so this was almost an $1,000 day of loss, but it was 2 trades. As long as you're not getting like trade, like in a single trade, like moving your stop down, because I've definitely been there. Or like, this is a $500 day. So as long as you're not doing like, and obviously all these numbers that I'm saying are in relation to whatever your account balance is, because over leveraging is just all based off of the leverage you have. So these, in relative to the account balance we're using, these aren't like knives in your back days. So there we go. Yeah, so that's what I was hoping for off the entry for this right here. And then we got stopped out down here. And it's coinciding nicely with the 10:50 to 11:10 macro time. Okay, I appreciate you guys watching this video. I'm going to log off for the day.